All right. Good afternoon, folks. Hope everybody's feeling all right. Hope the weather's great wherever you may be. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer, and a member of FINRA SIPC. You should have. Um, all my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. There's a lot of updates in here from when I last did an afternoon meeting, which was Wednesday of last week. Really, all the updates came from Friday through today, though. Um, got the market correction that I was looking for. Benefited me by being through price as much as through time between Thursday and Friday's pullback. So that was great. It was the opportunity for me to do exactly what I wanted to do into that sort of dip, which is pretty much liquidate all my shorts. I had shorts in all three indexes, SPYs, Qs, IWM. I'm all out of that. I had at one point last week Tesla short, coin short, Bitcoin short. I'm out of all that. The only one I still have is Palantir short. And then on top of that, I flipped long starting on Friday. Friday, I bought Google, AMD, and the Qs. I got out of the Qs long um, this morning into the move higher. I also got long TNA, so basically I flipped the IWM long. I also sold a ton of puts here, as you can see on the list. So very much flipped to the long side of this market after our technical pullback. Let's go over to the charts and see why I did that. Um, all right, so coming over to starting with the daily charts here. So going back, let's go back to Monday of last week. So 1 week ago, Monday of last week, we got above uh, Friday's high. So Monday of last week was the peak. It was the day 4 of the post-election squeeze. A lot of momentum there. Monday was the day that I said was the day to, you know, kind of put yourself on the line on the short side of the market. Unfortunately, Monday didn't turn into a whole lot, right? It was Veterans Day, whatever. The market action on that day was just happened to be very slow. Big picture, it did work out if you're able to kind of hold those positions through Monday. Then on Tuesday, Wednesday of last week, we had two really tight days in a row. We were studying the large amounts of positive gamma in the market. It seemed like there was very much an insulating effect on the market. I started to believe that our needed correction of the extension was going to be turning more into um, price correction, a time correction than a price correction. But there was still some space down to the ADMA, and obviously even more space to between the 8 and 21. So leaving open the possibility of a price correction, but it was looking a little more like a time correction was what was going to happen by Wednesday's close. Then on Thursday, we actually got the beginnings of that price correction, closed into the ADMA, closed on lows. Friday, which was OpEx Day can always have some weird price action, was way weaker than I ever expected it to be, to be totally honest. I did not expect the degree of weakness that we had on Friday. Certainly benefited me for most of my shorts, with the exception of Palantir. Palantir was nuts on Friday. Um, so it certainly benefited me. I thought maybe, and this came from Tate on our team here more than anything, like an overshoot of the 8 EMA to the space between the 8 and 21 EMA. He looks like a 13 EMA sometimes, just to kind of get more of a precise midpoint of those moving averages as a target. So I kind of liked the idea that he presented. Decided to be a little bit greedier on my shorts, and it worked great. So by Friday, kind of midday, I finished liquidating my index shorts, and then still had Palantir, which was ripping, and was out of coin, was out of Tesla. Tesla actually I flipped long on Friday. Was out of Tesla short on Thursday at my price target of 315, 316. And then I actually flipped long Tesla on Friday. I was buying Tesla at 310 on Friday, but I caught a great day trade. I made $10 on it. I got out at 320 and kind of just moved on. So I didn't have any Tesla left for the gap up this morning, unfortunately. But really got out of all the shorts except for Palantir and began to flip long. Got into the indexes long as they started to extend down a little bit into the 21 EMA and retest some key levels. SPY 586 is a big level that we broke out from, so we're retesting the prior resistance to see if it holds the support. The Qs I noted in the morning meeting today, I actually didn't even realize it at the time on Friday. The Qs on Friday at lows were $11 extended from the ADMA on the downside. So it's a little bit tricky when you get that fast move where the ADMA is still above the 21 EMA to judge like extension when that happens. But we went from extreme extension to the upside in the Qs to very quickly, you could argue, extreme extension to the downside on the Qs. So started buying some Qs, and that was with a lot more size, but not looking for as big of a move. So I was able to liquidate that position fully today via T triple Q from the IWM. The IWM on Friday was like this big day four down into the 21 EMA, also retesting this like 227 ish area, which is a really big level. It's the level that we broke out from. So both the SPYs and the IWM are retesting the breakout levels to see if they get held as support. The Qs have even overshot it a little bit. And for the IWM, there's no downside extension, but the IWM went from the most upside extended that I've almost ever seen to a really big four negative Maribozus in a row correction to test the 21 EMA. So, flipping the IWM long, looking for a move to see if I can get a move back to 232.50 on the IWM. Um, got, out of all those shorts, and that's pretty much where the thought process was coming into today. I just really further added on onto the long exposure. I started buying biotechs. Well, first of all, Moderna I actually started buying on Friday. And at one point on Friday, it was down a decent amount of P&L on my long, but I spoke about this with Greta a little bit in the podcast earlier today. Some of these names, Moderna went from 56 to 36 over like 7 trading sessions with a ton of downside extension. And a lot of the last leg of the biotech move, in my opinion, happened on the RFK news. But the RFK news was, I thought, very, very widely expected. So I was actually surprised to see as much selling as we still saw on Friday in the biotech ETFs and in Moderna. I think that had to do more with the indexes than it did with the RFK news, but it was probably one thing after the next. So was really buying Moderna, really just looking for a snapback to like $40, a little bit above 40. So actually almost at my target by the close today. So I'm out of the majority of my Moderna long at this point, but I do still have a little bit. See if I can get a move to a bit above 40. But that's for the most part all I was looking for. And then today, I started buying XBI and IBB. Uh, Another one. I'm not looking for reversals in these things, honestly. I'm just looking for bounce back trades off the what I foresee as extreme extension with the market coming into support. So XBI, had a false breakout back here on November 11th, and that has led to coming into today 5 big red candles in a row, and particularly the Thursday Friday move was getting kind of crazy into some support here at like $91 ish area. So looking for the RDR in this. I actually started before the RDR triggered. Didn't close well, but with both XBI and IBB, kind of similar to Moderna, I'm not looking for reversals. I'm not looking for huge moves to the upside, but I'm trying to take some size for a smaller move. So XBI, if I can get a move up to uh 93.50, 94, something like that. It's really all I'm looking for IBB, which I'm also swinging tonight. Um, if I can get a move up to like 135 to 136, that's really all I'm looking for on these things. I don't think that's asking too much considering where it came from, the amount of extension that's out there. But if the ADMA, if you start correcting through time and the ADMA catches up further to my target, then I'll manage it to the ADMA instead of just having the upside target. So just looking for snapback trades on some of these biotechs, starting to layer into some of these other names a little bit more. Have some TNA long. I started buying AMD and Google a little bit on Friday. AMD gave me pretty nice move to almost 141 today to the ADMA. I'm looking for more than that actually. But it's not a huge position. I don't want to get too big in this right in front of the Nvidia report, but I do still have some. Google I started buying on Friday as well. I still really like the chart. You have like a gap fill. I would have loved it even though I was already long to break Friday's low today to get me to size up even further. So you have a gap fill into this 170.50. I know it almost got there on Friday. Friday's low is 171 quarter. But I started buying some on Friday. I actually added pre-market to Google this morning. Was able to sell a little bit into the up move. And then at the same time, I sold a bunch of puts in a bunch of names. I like doing that at spots where I'm expecting after a pullback the market to pivot, so I don't have to be like necessarily exact on my pricing. But also I like to do it in names where if I end up getting the stock because the names trade down, for the most part, I don't mind getting any of this stock. So I sold puts in Path. I sold puts in SoFi. I sold puts in Cell H. I sold puts in Unity. I sold puts in Intel. Uh, what else? Maybe that cover. I sold puts in S. I sold puts in Pen. So just a whole bunch of names there. Just with the thought process of I'm really expecting this market to at a minimum hold here, and really more I'm expecting it to begin to grind back up. We also talked in the morning meeting today that I think with the vol selling that's coming back into the market, I know we did just get through options expiration on Friday, so we could get some quicker moves, but I don't think that we're going to see a resumption of the momentum that we saw on these first few days. I think that we see like sideways to grind up type action. More probably grind up, and the grind up comes from the underlying bid that's still in this market. $6 billion of buybacks coming in per day. I still think that the only thing that could derail this rally is interest rates and the dollar getting out of control. But for the most part, these are still kind of holding in. This TLT did flirt with the November 6th low, which would be a concern to me if we lost that. The November 6th low on a closing basis and the 10-year above 4.6% would be kind of my real warning signals, I think, for interest rates that could further derail this market rally and the dollar continuing to go vertical. But we got a relief even pre-market and it continued throughout the day from the dollar. So that actually acted as a little bit of a tailwind today. And interest rates, this TLT was a bit scary at one point pre-market and during the trading session, but ended up closing okay enough for now. So I appreciate the market for giving me the opportunity to get back on sides after I was probably shorter than I should have. Part of that just stemmed from I think many other market participants I was just really nervous that come the day after the election that we may not have like a result. And I felt that if we didn't have a result, that could lead to pandemonium in the markets. So I had fully hedged myself out and in some degree overly hedged myself from an index level. And then I was struggling to deal with the fact that I didn't want to just liquidate those shorts because the market had become extremely extended. So I was able to manage that extreme extension by actually getting heavier in most of those things and then capturing this pullback to then be able to, liquidate those positions and then flip a lot of stuff to the long side. So, as far as I'm concerned, the market has now fully corrected the upside extension that we had, and I'm looking for a pivot. So I said in the morning meeting today, I'm now looking for a pivot. Spies and IWM, as we know, are retesting the levels that they broke out from. The Qs maybe overshot that a little bit. And I mentioned in the morning meeting, I'm looking for a pivot pretty much in one of two ways. One would be a tail down today that breaks Friday's low and comes back up, or the other one would be an inside day today that leads to an inside no. So we got the inside day today, and we'll see. The two ways in which I really love for trend continuation pivots to come in are through continuation hammers, uptrends that is, downside tail continuation hammer, or an inside and up. So we got the inside day today, and I think I'm seeing Tate with a question on that, that I'm probably answering it right now. We got the inside day today to look for the inside and up pivot formation pattern, which is one that I like. So I would say it's productive in creating that pivot, but the inside day high and low will be important for tomorrow. If the inside day high breaks, so we probably erase, Friday's big sell day. If the inside day breaks down, we'll have to take a look at it as it comes. I think the inside day breaking down, maybe not the end of the world, but if Friday's low breaks, it could be problematic. It's not impossible for the spies to want to fill this gap back down to 577. But broadly speaking, I'm really, at the point starting on Friday through today where I'm looking for the pivot low to come into the market for us to work our way back up. And I have modeled and adjusted my portfolio to reflect that. So that is where we're at. That, I think covers most of my day. Outside of that, I day traded a little bit of Nvidia today, made a few dollars in it. Day traded some coin today and almost got smoked in it. Because I made some game planning risk errors in my trade, but kind of got bailed out of that short before the news came out that Donald Trump is going to be meeting with the CEO of Coinbase. So I was able to fully liquidate my short into this move here. I was looking to see if we get a move back down to like 310. Um, and it worked, and I made a little bit of money in it, but I did not make enough to justify the risk that I had on in this or the amount of money that I was down P&L wise at a certain point today. So yeah, that fully covers my trading session today, and my thoughts for going forward, and a review of this morning's game plan. So I am happy. Um, I'm happy to allow. I'm happy for any questions. From Tate and the VTF inside and up to negate Friday's candle from the indexes. Yeah, that's what I'm looking for from what we just talked about. So we'll see if today's inside day can be an inside and up and create our pivot point. From Chris, you might already know I was going to have questions on that coin short. I did not know that. So I wasn't necessarily trading it with a hard stop, more of a mental stop. I was able to trade it pretty well until it pushed up to that 231.50 area, and I just had to get out. Understandable. Um, that was on that last move, right? Yeah, it was tough. Uh, it made that move back to 310 like you were thinking, right after, which I was waiting for it to. When you're trying to manage that position in a stock that's moving like that, do you have a recommendation of when to absolutely stop out based on the chart or maybe a daily level? Like if that 310 never came in, where would you have just called an absolute throw in the towel moment? Not sure if you can give a clear answer to that, but would love to hear your advice. Sure. So the coin trade was really hard. Um, Part of my coin short when I put it on was based on my analysis of like the Bitcoin chart at the same time. So trying to see exactly when I entered coin here. It was a bit before 11. Um, but so I think that this Bitcoin chart broadly needs more rest. So I liked the idea of, big picture still being able to be short versus like the November 13th high, but maybe not with as much size as when I was actually shorting Bitcoin on November 13th on Wednesday of last week because you don't have the same degree of extension. So Bitcoin coming into 11 was really extending to the upside, this IBIT. And I thought we could get like a technical price correction on this as it works towards that like Wednesday high and was then extended on multiple time frames. Um, I did trade that 2x levered Bitcoin ETF Wednesday through Thursday of last week, and actually really liked how it traded. It was hard to borrow, so I had to pay for a little bit of a borrow there. But I really liked how it traded. But for whatever reason, I decided to go back to coin on the short, even though the idea was a little bit more based off of Bitcoin itself, but they usually trade a bit hand in hand. And coin also, um, thought maybe like we could get like a little bit of a lower high here off of this large amount of extension that still has from this 21 EMA, or at least some sort of a pause above 310. So when this thing was ripping higher, um, into 11 o'clock here, initially I was looking for like really like a 15-minute correction. So initially I was looking for a move to like 307 ish on my short. I had ended up adjusting that higher at a certain point as the trade progressed, and it was not price correcting. And as I was trying to manage the position, like I was able to get some covers on my short into this little 1110 pullback, into this a little 1145 pullback, even into this little 1245 pullback. While I was speaking with Greta, I was able to cover a little bit. I actually would have covered more if I wasn't distracted by doing that podcast because that was the first tick of the 21 EMA, and then it actually broke here with this lower high, and this was actually in some ways this was the best short, and but I'll go back to that in a second. Um, so yeah, I mean this thing was just grinding higher. The frustration, if anything, but it's also what helped me stay in the trade was that coin and also MSTR, which is in some ways is even weirder than coin, were both vastly outperforming Bitcoin. So again, coin is not a cryptocurrency, right? It's a cryptocurrency brokerage. Um, IBIT represents the cryptocurrency, but MSTR, as far as I'm concerned, is just levered Bitcoin. So MSTR, in my opinion, should almost always trade exactly with Bitcoin, except for with even more volatility than Bitcoin trades with. Though when we were getting these pullbacks in like IBIT today, I mean IBIT never went anywhere near this 11 a.m. high again. You had, a deep pullback here at 11:45, 11:50. Then you had a hold of resistance at 12:20 that led to a slightly lower low. Then you had a lower high that led to a very, very deep pullback in Bitcoin. And then Bitcoin was negative when MSTR was still up 9% on the day. And coin obviously was still up a lot also. So it turned out that those names ended up being a lot stronger than the Bitcoin itself. But I was very, very much watching Bitcoin for how to stop myself out of coin, to be honest with you, Chris. Which I don't know if that's the right thing to do necessarily, but it's what I was doing. When this high came in here at 1220, I kind of told myself if this pivot gets breached again at 1220 in combination with the relative strength in coin, then I'm going to stop myself out. That's what my game plan became. Uh, but Bitcoin, via the IBIT ETF, never broke that high. I got a little nervous here at the 1225 candle that it was immediately going to do that. And basically, my plan was if this thing breaks highs, then whatever the high is in coin, I'm just going to utilize that as a stop and probably stop myself out more or less right away. So when you got stopped out of coin when it made that new high, um, I was feeling it at that point. I was down way more P&L than I should have been. just because I didn't size my trade properly. And by the time I realized it was almost a little bit too late. Like I had to just manage the position per the game plan that I had created for myself at that time. But I'm recognizing that my game I just had way too of an aggressive game plan in this thing with way too much size to not have a very hard stop out. You know, for me, I can manage and massage positions as they move against me pretty successfully most of the time, as long as my sizing is appropriate. But once my sizing gets like really big, then I kind of can't do that in the same way. I kind of need to have really more of a hard stop, and this was a situation where the game plan that I created for myself was a game plan where I planned on kind of massaging the trade a little bit and trading it back and forth and watching it and not having a hard stop. But the sizing that I had on it was sizing where I honestly should have had a hard stop. So I was in a little bit of trouble when this thing made new highs at 1 o'clock, which happened, right as I was getting out of the podcast with Greta, which is on YouTube. Um, I not gonna make any excuses. But I didn't cover as much as I should have on the tick of the 21 EMA because I was speaking to Greta. And then therefore as that new high came in, my sizing was just out of control and it was looking really dangerous to me. And if that news with Donald Trump happened to have come out at that time and we got to move to 330 at that point, I would have been screwed. I would have been a really, really bad spot. Probably would have had to realize like a pretty big loss. So again, that's a game planning issue for me. I got to do a better job than that going forward. It's not a mistake I make too often, but every once in a while I do, and I definitely did today. But I was really managing the position at that point off the Bitcoin chart more than the coin chart itself, because I was watching, the algorithm and the tape that was buying the uptrend, and it was really strong. It was really, really strong. It was like Bitcoin would pull back, and we would get these little pullbacks in the coin chart, but they would run right into the mechanical buying that was coming in, algorithmic buying that was coming into this thing that was holding it up and that was creating all that relative strength. I did feel though that if Bitcoin could pull back deep enough, it would break that buyer at a certain point, and that's what happened. The best trade that I called out in this thing, I don't know if anybody caught it. I called out into the VTF. I wrote into the chat the lower high here at 135. I said off of this lower high, if we get a break of like 317.50 to 317.70, basically this last little low, which coincided with the 21 EMA, then I felt that the selling that would come in would overwhelm that buy algo, and or the buy algo would just be gone. So that was the best trade. All the pain that I endured shorting this up grind with too much size, um, I didn't need to have any of that if I was watching the stock closely enough to just recognize this simple lower high pattern that came in that led to the break of the uptrend that created the bigger pull. So that was finally the move. Got my move to 310, which was kind of what I was looking for. 310, 311. Actually held a little bit down to 309, so I fully liquidated the position at 309. And then I was so thankful to be done with the trade and out of the way with it. The P&L that I'm up in coin today does not justify by any means the amount that I was down or the mistake in the game plan that I had. I kind of feel like I got a little bit lucky, maybe a combination of luck and some skill. Uh, and then the news eventually came out that Trump is going to meet with the CEO, and the stock just ripped after that. And I was like, oh my gosh, thank God I'm out of this one. So yeah, so that was kind of how I traded coin today. You're literally in the same boat as me in the trade. It sounds like I was way too big size by the time I got there. I just couldn't justify putting more size on. Yeah, I mean that's sizing is a hugely important part of trading and risk management really. And that was my problem also. I definitely had a size issue in this coin, and luckily because of how well I was studying the Bitcoin chart, which I want to note, the opposite could have happened also. I was watching this Bitcoin chart weaken out and fail and coin holding in. There was a chance here that this coin chart could have actually, I mean, the Bitcoin chart could have broken back up. And if the Bitcoin chart broke back up and coin was relatively strong to it and never broke this trend, it also could have been lights out for me. But all is well that ends well. I'm glad to have escaped by the skin of my teeth. And most importantly, even though I made money in it, I'm recognizing to myself that I really didn't do a good job. I really didn't have a good game plan, and that I need to do a better job going forward, not repeat my mistakes, and make sure I have my sizing right. So I hope that helps with your questions there, Chris. From Carol, the degree of the pullback last week, especially on Friday, was a bit too much. Of course, the initial elections move was also super strong. Do you see any downside risks, and what will you be looking for with the IWM and the Qs? There's always downside risks. I definitely see downside risks. I keep talking about interest rates and the dollar. I think that's the major downside risk that can derail this market. But at the same time as that, all I'm seeing for the most part, I don't think that the pullback is too much. Spies into the 21 EMA on the daily chart. It's not too much. It's healthy still. The Qs you could argue overshot it. The Qs are a little bit concerning. The IWM is also plenty healthy still at this point. IWM. Pull back into 21 EMA, spies and IWM just retesting the breakout. I think that's fine. Q's a little bit more concerning. You want them to get back above 500, but not necessarily the end of the world either. As long as they're still above 485, the bull trend is still intact for the Qs. I really like the seasonality in flows right now. Um, I do not like that I was as short as I was last week with this market, with all the buy flows that we're talking about. $6 billion a day in buyback is a huge number. It's a number I really don't think that you want to be fighting on an index level perspective without an event occurring. You almost need an event, I think, to ruin the market. An event is a currency crisis. It's an interest rate crisis. It maybe could be a disaster from Nvidia. Those I think are the downside risks for the market. Um, and then we'll just study our technicals. That's why I think that the inside day today was constructive. But if you lose Friday's low, then you might have to reassess the bull thesis on this market. So Friday's low is a big spot that I'm paying attention to for now. But for the moment, I'm back in my longs. So from Adam, outside the obvious cute day trades that are specifically mentioned in the VTF, do you get into every trade with the intention of it being a swing? That's pretty much it. Either I'm doing it as a cash flow day trade, which we can describe as a quotes cute day trade, uh, to make some cash flow for myself, or I am mainly looking to get in things for swings. Yep. I think that would be a fairly accurate statement to say. Um, my edge in the market has really become defined by my ability to capture bigger picture daily chart moves while actively day trading around core positions for day-to-day cash flow while I wait for the big picture moves. I am a believer that the big money in trading comes from capturing big moves on size. And a lot of the times, not always, but a lot of the times, the big move is a multi-day move. And if you can capture those on size, you make a lot of money for yourself. So that's kind of the broad goal, I think, for a lot of what I'm doing, while having day-to-day management of those positions for cash flow, and then also throwing in some day trades, which I was doing a lot more of throughout the month of October. A lot more just quicker day trades, like we talked about in one of the afternoon meetings, just trying to make whatever, um, money that I wouldn't describe as inconsequential, but adds up if you're able to have kind of one after the next, while waiting for more clarity from the big picture. Which now I feel like I have more clarity from the big picture, so I'm repositioning myself again for those bigger moves. I would love to take more just pure day trades, to be honest, like I was doing in October. The problem, and then this is what happened to me a little bit today on a couple trades I was trying to put on. The problem is that it just becomes managing so many positions at a certain at a certain point that just becomes difficult for me. I have to prioritize those bigger P&L trades, not the cute day trades. But I liked the cash flow that I was making from those in October, so I want to continue to do that. It's just, right now I'm in 29 positions again, if you include the options positions that I have on, which the options positions I don't really manage, so I don't have to worry about those as much. But just the names that I'm in, that I'm trading very, very, very actively. I was trading the Qs very actively at the open this morning. Palantir, I mean, the Palantir move this morning was crazy. I'm trading that super actively. Moderna was trading super actively. All these other names in here. It just then eventually becomes too much to then, add on a whole ton of intraday trades at the same time. Even though I did a little bit in Nvidia today, I did a little bit. I did a AMD like day trade on top of my swing trade at a certain point. I did that with Palantir today a couple times, and overall it worked out. Though I almost got myself into trouble with coin. Anyway, let me read the rest of your question. Or maybe the better question is, do you specifically look for setups that have the potential for larger several day moves? Yeah. So I'm a big believer that even if you're a pure day trader, you want to be trading in the direction of those catalysts for the larger several day moves. I think those will be the best day trades. And then if you get a really good close on day one, keep a little bit to see if you get the day two and day three. It doesn't have to be a lot. Keep 10% of your position, keep 25% of your position. I really think that's where reward maximization comes in. I started my career as a day trader for years. At this point in my career, I consider pure day trading to be reward limiting. Like, I don't know. Tesla maybe isn't the best example because I didn't capture the long myself. But if somehow you bought day one in Tesla, just bringing it up because it was just mentioning this one because it's such a big move. If somehow you bought day one in Tesla and then you're like, yeah, I had a great day trade. It's closing at highs. I had a great day trade, but I'm out here at 289, and you're $9 in the money on this thing. Why? And it closes on highs. It's the other thing I'm noting here. Why not keep 10 or 25% of your position? If you fully liquidate your position at 289, it was a good trade. But if you kept 10 or 20% of your position to 350, even that small percentage of your position just adds so much P&L. It makes your risk reward ratio so much better that all this battling that we do of so many trades where you lose some money, you make some money, you break even, they all become gravy if you can have a few trades a month that are huge risk reward winners that give you really big P&L. And to take a half step back, I still haven't even fully read your question. Take a step back and talk about account management for a second, which is something we should talk more about generally because it's so important when it comes to trading. I have seen trading runs month over month of my own trading for 15 years. I've also been managing traders for 10 years. So I've seen the trading runs of other traders month over month, over and over and over and over and over again over the course of many years now. And I can tell you, it almost always comes down to the same thing when you're same couple things when it comes to account math on whether or not you're making money or losing money. The traders that are losing money or not making money, they when you look at their runs month over month, they have at least a couple days every single month where their downside was out of control and they lost much more than they were supposed to lose, and or they have 0 days where they have upside P&L that's a multiple of what they lose on the down days. We get so focused as traders on the trade that we're in that moment and how much that trade means to me, and that I make money in it, that I'm right, that I don't take a loss on it. It's a recency bias. We lose the forest for the trees. Um, it's pretty much never about one trade in this business unless you make it about one trade. Meaning, like, the trade that you're in right now, if you manage your risk on it properly and stop yourself out where you're supposed to and take a loss on it, it hurts and sucks at the time. And then by the end of the month, if that was a trade that you took in the middle of the month, you forgot about it. You don't remember the trade at all. Um, where you hurt yourself is, and where you don't become successful as a trader, is those one or two times a month where you didn't stop yourself out because you couldn't face the agony of defeat of taking that loss, and it becomes a day that becomes a multiple of what you're supposed to lose on the downside. So let's try to break this down into some simple numbers. You're not supposed to lose more than $500 in a day. You have two days over the course of the entire month where you lost 3x your number. You lost 1,500 or $2,000. Um, that in and of itself, forget about the upside for a second. That in and of itself probably ruins the entire month. There's a good chance that just because you had 2 or 3 days over the course of a month where you allowed yourself to lose 2 to 4x your maximum loss, that it ruined the entire month of trading for you. The flip side of that is on the upside. If you don't let yourself lose more than $500 a month, and hopefully you do a good job with that, but you never make more than $300 in a day, the numbers are also not really going to work out. You need to be able to have not a lot, but 2 to 3 days a month, just a few trades in the entirety of a month, where you capture, that extra 25% of your position. Instead of getting out at 288 in Tesla, you get out at 350, and then the upside P&L that you make from that is a multiple of the bad day. So that Tesla trade, I mean, that was a huge Tesla trade. You know, maybe that Tesla trade made you 5 grand, and you're not supposed to lose more than 500 a day. Or maybe you just had, 2 or 3 trades over the course of the month where you made, $1,500, $2,000, $2,500 throughout the month. That's all you need to do to be successful in this business, is make sure that you don't have, if you can now combine the two things that I'm just saying, you never let yourself lose more than $500 a single day of the entire month, and you have a few outlier days in the entire month where you made a multiple of that, I can almost guarantee it's a positive month. I can almost guarantee that you're making that it's a positive month, and that you're making money 11 months out of 12 out of the year. Just from that alone. That's really all it takes. Everything else is water under the bridge. Everything else is just like, I made a little bit on this trade, I lost a little on this trade, I was break even on this trade. The ones that matter are the ones where you let the risk get out of control because they ruin the entire month, or the reward really works for you and it makes your entire month. So the ideal trader, again, will never exceed that $500 limit, have a few days a month where he makes a multiple of it, makes money every single month. The mediocre trader will have a few days in the month where he loses control of his risk, and a few days of his month where he makes significantly more than his risk. That'll be a mediocre trader who probably is break even and bleeds out over time. And then the trader who just will not be successful is the trader who um, has a few days a month where the risk gets out of control and loses a multiple of it, and 0 days of the month where he holds for that huge winner that happens multiple times on the upside. So every trader who's listening, ask yourself which one of those 3 or 4 traders you are, and which one do you want to be, and what adjustments you need to make to get there, because that's really really it. All the successful traders I see, they very consistently manage the downside, and in one way or another, and then they have these days where the upside is just so big that they're consistently profitable traders. So that's what you have to do. I know I didn't even finish reading your full question. I'm trying to figure out how to balance my day trading and when to hold positions longer term. I don't necessarily have the capital risk tolerance to build into positions as they work against me. Um, but being able to catch those larger day week moves seems to be the best way to build my account. Yeah, for sure. So I know that, and again, this just circles back to one of those tough things for me where, I like to talk about what I do, but I also like to talk about what I think is best for traders to do, and sometimes they're not the same. I know that a lot, like some of the ways in which I trade some of my positions are ways that not everyone can trade that way, and I still think it's the right thing. I used to talk much less about my own trading and much more about only like what I felt the right things were to do. But I feel like it's been better for the team when I talk more about what I'm actually doing, and why I'm doing it, even if it's not always perfect for everyone. Um, but one of the things that I used to always say to traders, and for my own approach for a long, long time, and it still is my approach to a large degree, is all my swing trades start as day trades. It's not that way for me anymore, but for a long time, and something I'm still an advocate of, all my swing trades start as day trades. So the approach is a top-down approach. We start with the big picture of the indexes, then we go to the small picture of the indexes, like the gap, the game plan for the day. Then we break it down to the individual stocks. So you combine all that information. Then you look for good-looking daily charts where there's big daily chart potential and you're on the right side of that daily chart, but then you look for the small time frame execution. So if you get a good day trade on based on what you see on a 5 or 15-minute chart, but it's also in conjunction with what looks good on the daily chart, and the day trade closes well, then keep 10 or 25% of that position when you're in a win-win situation overnight to look for the bigger swing move. And then the worst thing that can happen to you is that, the next day the trade goes against you and you end up getting stopped out of that 10 or 25% of your position that you swung. Not a big deal. If you manage the trade well, it should still be a positive trade in that case, unless really bad news happened overnight, which can always happen. Happened to me with Palantir on Friday. I got the whole market move I was looking for my shorts, but Palantir had good news and just ripped in my face, and I finished down a lot of money on the stock. Um, so I was able to make a good amount of it back today. News happens rarely, but it does happen. Um, but you know, put your that exactly what you're saying is the right thing to do. Start them as day trades, let them close well, then hold for the bigger move. If the daily chart's telling you that bigger move is there, and if the daily chart's not telling you that the bigger move is there, you probably shouldn't be taking it as a day trade to begin with, because you don't have all the layers of probability lined up properly. Oh, so I hope that helps. Just let me see. This is a question from Rex, but let me just see if I have follow-ups on what I just said before I go to Rex's question. Um, Rich saying avoiding the big losers is super important. Um, cool, no problem, Adam. From Jim, I find it much easier to achieve this risk reward by swing trading versus day trading. Yeah, me too. My longer term accounts rarely have an outsized loss that kills a month. It's more so a string of losses that lead to a losing month. I find day trading much harder to avoid this outlier loss scenario because you're operating close to your entry and find it inevitable to avoid the outsider. Well, I think that um I think when it comes to day trading specifically compared to swing trading, that people who are day traders take more trades, and therefore have a higher possibility of just having an outlier where they make a mistake, a risk mistake. I still think it's the risk mistake that really hurts you. And if you're taking, I'm just gonna make up some numbers, 10 swing trades a month versus 25 day trades a day, uh just as a numbers game, there becomes a probability at a certain point where it's a higher probability that you just make a outlier mistake on a day trade that hurts you. I still think that if you can consistently manage your risk on your swing trades every single time, then you have more or less similar risk reward situations with pure swing trading. Except in some ways, actually, it might be better risk reward on the day trading side because you can choose to do what we just talked about, which is turn the day trade into a swing trade for a significantly larger reward side. Um, but then again, like I'm saying, I think you open yourself up to a higher chance of just like I did with coin today. The coin was not meant to be a sword I wanted to die on. It was not meant to be a swing trade. It was just meant to be like a, extension day trade that was against the direction of the daily chart. Too early to be short on the daily chart, by the way, but maybe enough to be short on like, that 5-15 minute chart to make a few dollars for myself. And then, you know, made a risk error that almost cost me, big time on that. Where and I was even thinking about it while I was down a ton of money. I was like, if I just focused on all the bigger picture stuff I'm trying to do right now with this market, because I like the big picture again, I wouldn't have this coin headache that I have on right now. And then the worst is, and this happened at a certain point also, is if I start to mismanage a swing trade because I'm overly managing the day trade. That's all terrible stuff. But, whatever. It's my thoughts on it. Every trader should recognize what works best for them, though, and focus on what works best for them. From Austin, I find myself stopping out a lot and never being able to catch big moves. I rarely go to my max loss, but I hit my max loss a lot more than I have profitable days. Um, to me, that sounds like it's either an idea problem or an execution problem, specifically, one of the two. So I would just encourage you to try to communicate your trades in real time more into the VTF so we can try to give you more real time feedback. I know on some of these days it's hard for me during the day because I've just got so much of managing, especially off the open. But I'll do my best if you do your best. If you do your best to communicate them, I'll do my best to give you feedback on them. Because to me, that what you're describing sounds like either you have an idea problem or you have an execution problem of those ideas, and hard for me to be sure what it is. From Tate, for what it's worth, I aim to swing all my trades, but if I intend for a trade to be strictly a day trade, I make that decision before entering the position. My primary focus is always on day one setups. I love that statement, by the way, so I'm going to repeat it. My primary focus is always on day one setups. By not swinging the position, I limit my reward potential. My approach is to buy on day one, add on day two, and exit by day three. I like it. From Jim, I'm realizing for myself I'm better looking at lower time frame chart for an entry to maximize risk reward for a multi-day move, but almost immediately just walking away with a stop in versus trying to trade around the position. Okay. When I get into a rhythm on day trades P&L wise, I almost I almost always end up taking that outlier loss as I size up to the next tier. Yeah, the only thing I would add on that is maybe if you find that you're hurting yourself by like over trading the swing position, like what I talk about for cash flow, maybe there's just some adjustments to the game plan that you can make a little bit, which I'm happy to work with you on that. Some of like the cash flow stuff that I do, I find can be super beneficial for um, uh, for me because I'll still be there for the big moves. Some CI higher. I'll still be there for the bigger moves. But if the trade doesn't work out, then that consolidation that I found myself in can also make me a lot of money in the meantime. All right, going back up to Rex, would you consider Tesla news as a bad catalyst for Uber? I wouldn't think so. I don't know the Uber story well enough. It looks like if Uber decided it sure was. I wouldn't think so on the surface of things. So I took Tesla long and Uber long on Friday with an upgrade. This morning, Uber gap past my Friday low loss stop. I feel like you always get stuck in bad news on your swing trades. It's crazy. I don't know anybody who's ever been stuck in bad news more often on a swing trade. Um, Uber usually trades in a dollar range. When I took the trade on Friday, I had 20 cents risk on the trade, so I had some size on the swing, and it had me take a huge loss when I put my stop in at the 15-minute low. with its gapping passed against me and traded $5 down on the first 15 minutes. Do you think I shouldn't let it run for 15 minutes, put a hard stop there instead? I should have stopped at the pre-market. So I follow the 15-minute rule. And actually, we talked about this recently with Tate uh, when he asked me the question. I follow the 15-minute rule, and I still, if I'm making any adjustment on that, it's the only adjustment I'm making is not getting out after the 15 minutes because there's too much downside extension on the small time frame. Like for me, and this is actually a perfect example of a chart where I probably would have hurt myself even more. Stop yourself out at 15 minutes, you're getting out right here. For me, I would have waited for this pivot low to come in, and then I would have gotten stopped out here, and I would have lost even more money. To be honest, that's the only adjustment that I'm making. I'm not making the adjustment in the other direction where I'm getting out based on pre-market chart or right at the open or anything like that. So I actually, with how I've been trading now, would have lost even more, to be honest. Um, I would have thought that the Tesla news would be good for Uber. Obviously, I'm wrong. Somewhere, my thought process is flawed. But my thought process would be that so the news that positively impacted Tesla is that Donald Trump is making self-driving vehicles like self-driving vehicle regulation a priority to speed it up. And that's what Tesla is really trying to hang their hat on from a business perspective to grow into their multiple. I would think that that would benefit any car that's trying to be involved with self-driving. I think we just so some sort of headline or article or news. I think we all did. Maybe it was just me and my own research that talked about the potential of Uber, Lyft, and Tesla actually all collaborating at a certain point to utilize each other's technology for the benefit of everybody. Um, like maybe Uber as a company starts buying self-driving taxis from Tesla as an example. So I would think that that would benefit all these companies. I would think that it would benefit Google also, but obviously the market disagreed in how it treated Uber and Lyft today. So my thought process is flawed somewhere. Uh, so that kind of covers the VTF. Mike Reed here also giving a link that people can check out um, where you can kind of he's dissected the afternoon meetings by theme. So pretty cool link there. And thanks, Mike, for the hard work to benefit everybody. Popping over to the YouTube, Uvixible likes my SoFi position. Thank you. From Apex Joy, what's your view on Republic taking over the government affects Google antitrust case? I have no idea what you're talking about. I know that there is Google antitrust stuff ongoing. I'm aware of that. I think that the sum of the parts of Google is worth more than the whole. So I don't mind that. Honestly, if Google gets broken up, I think that it's worth more. But I'm not. I really don't know what you're talking about when you mention Republic taking over the government effects on the Google antitrust case. I know I'm unfamiliar with what you're referencing, so I need more information or I need to do more research. Does T3 allow you to sell naked puts? Yes, they do. They tend to limit um, leverage on that, but selling naked puts is generally not a problem. From Uvixible, regarding your comment on whether you should talk about your own trades or not earlier, I found that you talking about your own trades to be a very effective tool for myself to analyze how I can change and improve my own strategy. Um, Not many people are willing to do that for some reason, which is really disappointing. Cool, cool. I'm glad that it's benefiting you, and I'm happy to continue to do it. All right. 10 after 5. Looks like I got through everything in the VTF and on YouTube. So I'll wrap it up there. If you're in the YouTube, give me a thumbs up and tell your friends. If you're in the VTF, you're awesome. Just love having you. See everybody tomorrow morning. Have a great night.